G'day, legends. I think we've got a massive capital rotation coming in the next couple of weeks. I'm going to keep things relatively simple for this video. I'm just going to show you what I'm seeing on metals in terms of volume and targets. We're going to use the same thing for altcoins, and I'm going to show you how I'm looking at playing this in the next couple of weeks, what I'm looking for. So you can see here, Ethereum, if you guys remember my last YouTube video, I said I was expecting a bounce at 2,800 on ETH. So got that bounce at 20, ended up getting down to like 2650 through here. You can see we pushed up about 25%. Now, unfortunately, I said here that, I didn't look like we were going to get that bottom because we could see that they've put in like an ABC on low volume. I said that I was expecting to see further downside from about 3,300. We pushed up to 3,400 and then we ended up getting that big dump into these lows. Now, something I want to show you on gold and something I want to show you on Ethereum, etc. Right now, if you want to find targets for the market, right, it's as simple as using fib extensions. Right now, these work really, really well on the metals market. Now, what you want to do is you want to find your first big, strong push out of the hole. So you can see that there's a big, strong flow of money through here. So I just want to run my fib extensions from these lows, right, to the top of the first big push out and then back to the pullback. Now, this should give us upside targets. If you want to see if these targets are likely being respected, all you need to do is look to your right and say, okay, what do you see here? Now, I can see that on the way up, this 618, the market has bounced, bounced, bounced. That means this is very likely a strong set of targets for the market because these are based on Fibonacci ratios. You can see here at this one, we got buyers came in, pushed all the way through here, and the first time we saw a sell-off was at this one. So you can see that the fibs have been respected here, been respected here. Then we got this last big euphoric push, and ultimately the market has hit this 2.618, and then the sellers have come in. Now, what's interesting about this time is that we can see this very, very high volume highs. If you have a look at these volume candles relative to the rest of the market, we can see that this volume is much more substantial than all the candles previous to it. Now, when you see big volume come in at the highs, what that typically shows you is institutional selling, right? Excuse me. Excuse me. It shows you institutional selling because institutions load up heavy at the load up heavy at the lows and sell heavy at the highs, right? Now, when you can see big fat volume like this, it typically will tell you that a market turn is coming. All right. If we have a look at the last time gold saw a high volume high like this, we look back into the market through here. What can we see? We can see we've got this big high volume high, right? And then the market proceeded to sell off for how long till we found a bottom? For 245 days, the market sold off for. Right, now, based on history, based on the fact we've hit these major targets, based on the fact that I suggested a pullback for gold and just got berated in the comments, we can see that it's a very heavily one-sided stacked retail-driven trade, right? Which is a perfect environment for institutions to offload their bags while there's peak euphoria, peak liquidity in the market. Now, that doesn't mean this is the top for gold and then gold's not going to go any further, all right? I still do think that gold has another massive, massive leg up, but I think it's very unlikely that that happens right here, right? Without a bigger, more substantial pullback coming through for the gold market. As I said, the last time we saw a high volume high like this, we saw the market dump. Now, what does that mean for crypto? Uh, Money rotates between risk on and risk off markets. So typically speaking, as money will leave gold, you tend to see money move into risk on markets. Now, this isn't always the case, so we need to confirm that by looking at our crypto charts and seeing what we can see. So having a look at Ethereum using that exact same concept, what we had last week was a very high volume low. Now, you want to look at this comparatively speaking with the rest of the weeks prior. So if you have a look, when was the last time we saw volume like this? I'll draw a horizontal line across the market. When was the last time we saw big volume come in at lows like this? It would be this candle here. And when was that? That was October 2022. We've seen the highest volume come in into the market at the lows since October 2022 on Ethereum. So we've got a high volume high on gold and a high volume low on ETH, on risk on assets. Now, coupled with that, there's a whole bunch of other Elliott waves, a whole bunch of other more complicated stuff that is giving me big vibes that we're about to see capital rotation into crypto, at least for the short term. Outside of that, during midterm elections, February has typically been a very bullish month, and we tend to rally at least until late March. So what I'd be expecting to see here, if we do get this bottom on Ethereum, which I think is very likely, is for the market to find some kind of support. I'm expecting one more sweep of these lows, take care of all this weekend liquidity, and then at least see Ethereum back up at 3,800%, which should result in a very substantial move for altcoins if we get it. So something else I want to show you is this is what's known as a draw on liquidity. All right, the market intentionally manufactures stop losses at certain levels, and they do that because when retail traders, so say everyone's buying through here and their stops underneath this low, they're buying, buying, buying. Now what happens is there's a whole bunch of stop losses through here. Now when the market comes through and they sweep these stop losses, they stop all of these traders out, and then all of these buyers, all these stop losses from the buyers, then become sells. All right, so that what that means is if I want to position $1 billion, I manufacture all of these stop losses through here. So say there's $1 billion worth of retail stop losses, then I can come through, sweep the stop losses, and position my $1 billion to the other side because all of these buyers turn into sells, and it then gives me someone to buy from. Right? Doesn't need to. You don't really need to understand the mechanics of it, but look, let me just. It works. All right. If we have a look back here, you can see that I use this exact same concept on gold and silver. All right. $45 silver. I can see. Look, see, they've got all of these combined like a cluster of lows, right, sitting above a fair value gap. They're called relatively equal lows. Now you can see here we've got this low here and we've got this low here on Ethereum, and we've created this weekly fair value gap below. This would lead me to think that this is done intentionally, and I would be expecting Ethereum to bottom somewhere, but somewhere, right, through this leg, somewhere through this zone here, I would be expecting to see a bottom on Ethereum. All right. I want to see one more sweep of these weekly lows, and any kind of reversal through here, I will be looking for buys. Now, altcoins are at these extreme lows, man. They're at massive, massive lows here with huge potential upside. Now, Dash has a very strong structure here, and what I'm looking for is for them to tap into this weekly fair value gap through here. So I'm looking at Dash anywhere underneath $28, and I would be looking at them targeting new highs. You can see the market's left behind fair value gaps above. Now, these are what's known as order book imbalances. You can see, once again, we've got relatively equal highs with the monthly fair value gap. So my target on Dash, right, once we get this reversal, once this market is ready to turn, is up at $160, man. You're looking at it at a 450% move. You're drastically outperforming gold and silver in what's likely going to be the space of 1 or 2 months. Right? Now, it is important to wait for reversals through this zone. You do want to still see some kind of confirmation to tell you that that is what the market intends on doing. Maybe we get an aggressive push down and we just capitulate, but I do think it's extremely unlikely. All right, if we have a look at this, look at the buyers. Look at the buy side candles, right? Big, strong buyers. And then when the market sells off, you can see that the volume declines, right? It just goes flat. You can see that this looks a lot more like accumulation than it does like distribution, right? Big, strong, heavy, fast-moving buyers, slow-moving sellers coming into the market. So I think it's very likely that Dash does see a lot of love coming in at this level underneath $28. Right? Anywhere underneath $28.50, I will be looking to buy some Dash. So look, that's pretty much where we're at, guys. It looks, it's so interesting, man. Everyone is just berating me for the suggestion of the fact that gold could even pull back because we've got war and we've got this and we've got whatever. It doesn't even have to dump, man. Gold might just trade sideways for 6 months. But what I'm saying here is you can either buy shit that's just had a massive 200% move, or you can buy things at extreme lows that are showing very large amounts of promise. ETH with the highest volume low candle we have seen since 2022, right? The highest volume candle we've seen in nearly 4 years. And it's coming in at these lows right now. So, look, I mean, I know where probability favors, right? I know where I'd rather have my money right now. Anything can happen. All right, we're going in, we've got all this war talk and blah, blah, blah. If I see a reversal through this zone on Ethereum, I'm taking it, man. Dash anywhere underneath $28.50, great idea. If you're buying gold and silver right now, man, you're nuts. Look, look, if gold, you might get another 60% move on gold. And do you know how much money would have to flow into gold to hit an $8,000 evaluation? Like I said, I do think metals in the long term, silver especially, do look good, but I think there's definitely better places to be looking at positioning your capital at the moment. And those are the places I'm looking at. I do think we're going to see a risk off to a risk on rotation in the coming weeks. Guys, if you want to trade this with me, I will, and the team, I'll drop a link in the Discord. Any questions, feel free to reach out. Take care and good luck.